And here comes the key discussion for today, and being prudent might be the best thing to do in this crazy Delulu world. Some topics we need to discuss: Buffett underperforming, the growth focus, prudence, and how to be prudent. It can be cash, can be hedges, can be value. Let's start with Buffett underperforming. All true, but Buffett wasn't able to beat the S&P 500 total return during the past 20 years. Let's check if that is true. It is not true. Buffett destroyed the S&P 500 in the last 50, 40, 30, 20, and not yet in the last 10 years. Because if I look at Berkshire return over the last 20 years, your money has increased 8.1x. If I compare that with the S&P 500 total return with reinvested dividends, 10,000 has gone to 80,000. So Buffett has beaten, or let's say equal to, the market over the last 20 years. However, this now is a bubble on zero interest rates, on money printing, on whatever. This is one of the biggest financial bubbles in the world. So, of course, Buffett didn't destroy the stock price appreciation. However, let's look at the earnings of the S&P 500. This is the Standard & Poor's earnings list. And here you have them as reported, and then I go to 2005, to get your earnings. S&P 500 earnings in 2005 were 65.5. I compare that to the current of 222, which means that S&P 500 fundamental earnings, despite this being great 20 years, grew 3.3 times. If we look at Berkshire earnings, net income was 8.5 billion. If I look at the current, likely for this year will be 45 billion. Berkshire, Buffett, grew the fundamentals 5.6 times, the S&P 500 3.3 times over 20 years. Thus, perhaps the stock price didn't move as much, or is equal compared to the S&P 500 bubble. Buffett destroyed the market in the last 20 years, and I'm pretty sure Berkshire will do the same in the next 20 years. Because the market in the short term is a voting machine, and all these comments are just voters. In the long term, it's a weighing machine, and that's Berkshire. And if you think about the bubble, more than 50% of the current S&P 500 level is just voting. It's just price, it's just Bitcoin, it's just crypto. You know what happens there. Buffett is doing no buybacks, S&P 500 is destroying value with stupid buybacks. That's being prudent here, and perhaps a great comment here from a recent interview, Howard Marks: when everybody else is getting the Lulu, it's time to be more and more prudent. Because the concept of prudence is key when it comes to your own wealth accumulation, but that concept is forgotten. Today in the markets, AI, investment, stocks going to the moon, crypto, it was NFTs, specs just a while ago, same story all over again. The governments are also going crazy with deficits, everything great. It's all about growth. You win the elections if you just promise more money, more stimulus. The golden ages, the deficits, nobody cares. The billions, trillions in debt, nobody cares. We'll reach 40 trillion next year for the US. On top of that, there are also the unfunded obligations that are the promises there. The net present value of that is 73 trillion. Good luck with paying for that. But AI will change the world. We will invest trillions in growth. And the question is just up to you. It's a personal thing. Do you want to be prudent or exuberant? I prefer prudence, and there is 3 ways to play that prudence. In short, you can have cash, like Warren Buffett, you wait and that's it, no real return, but you have safety. You can have value, you can be hedged, and those are the 3 solutions. That is in short, and the first thing I want you here is to think how prudent you are and whether this is something you adhere to. Then I'll make 3 special videos. Today on the hedging, tomorrow on the value diversification hedging investing strategy, and then we can also discuss cash or even gold if you prefer, if you let me know in the comments during the next week.